Right, morning traders. Welcome back to Morning Cup by Aiman here. Right, so looking at the S&P 500, it climbed yesterday by almost 0.3%. So I think the markets are still wobbling, partly because of the renewed trade uncertainty, right? If you notice, Trump just voted the 100% tariff on the uh, foreign-made films, right? Which signals that he is still in, I would say, still in a protectionist mode, right? So heading into the looming U.S. government shutdown risk with funding deadlines resolved, right? So even though I think fundamentals and earnings are okay, the combination of tariff surprise as well as the political um, gridlock is giving might give some investors a pause, right? So looking at charts right now, resistance remains at 6,700, while support is back at 6,500 points, right? So looking at the US trading stocks that we have published overnight, so we have Ford Motors. So the stock has breakout above the $12 level. So if the bullish momentum to persist, we can expect that the stock to travel towards the $12.50 on the strong momentum, followed by the next resistance level at $13 level. So now, if the counter reverse and trended softer, right? So do watch out for $11.45 level for the immediate support. If I mean, as it could indicate an initial trend reversal signal, right? So next also we have Roblox Corp RBLX. So if you see here, the counter experienced a follow through rebound from the previous session's momentum, right? Jumping higher and eyeing for a breakout above the immediate resistance at $136 dollar level, right? So if the stock able to climb higher, we could see that it might travel towards the $145 level with the next resistance at 155. So now, if the index slide lower below $126 level, well, it might shift to a bearish structure. Right, so looking at the China A50 index, which is right, so it recouped the losses on Monday, right? Likely helped by renewed tech strength and also inflows into Asian equities, right? So I think the bond markets the bond markets easing yield pressure as well as the technical support zone held up too, right? So yeah, I think it's a bounce in sentiment, but it shows buyers interested remains. So let's watch whether this hold beyond the short term, and however, if it's still trending higher and remain in upward or a bullish fashion, right? Now expect it to target the 15,500 points. Also, if you see here, the index now trending above both moving average, which also giving support to it, right? So, well, looking at the WTI crude oil futures, well, it slid around 3.45% on Monday's session. So the drop appears to stem from the renewed supply scull. The Kurdistan just resumed export after years of offline, as well as the OPEC Plus is looking about to add more barrels in in November, right? So I think in short, supply fears also as I would say the overheat, right, in sentiment are forcing a reset. So technical wise, if you yeah. Uh, I mean, it has a breakout above our previous resistance yesterday at $64 level. Hence, we shifted to a positive trading bias now. Well, for now, I think we see that the 67 dollar as the immediate resistance together with the 70 US dollar level, right? Now we saw that significant support is marked at $62 level. Also, last week, if you remember, um, we mentioned that there's a triangle pattern appear, right? So now that the price has experienced a breakout pattern formation, can expect the price to go further. But I think yesterday's move was just a slight retracement. Okay, so yeah, coming back to Malaysia, well, the FKLI's slight gains yesterday, maybe partly driven by the positive policy expectation, especially around the fuel subsidy being lowered, I think starting today, right? So this also could flow a positive sentiment, right? So meanwhile, I think team like the green energy RE and also positive outlook for plantation also can contribute to the surrounding. However, given the recent warnings of the market condition, right? The upside may not be broad or aggressive unless a fresh catalyst emerge, right? Also, we have a few IPO listing down in pipeline with some of the RE names, right? Technically, if you look at the charts here, we are positive on the FKLI, waiting for the technical breakout above the 1620 points. So yeah, still remain on positive bias. Right, so yeah, our watch list remains attractive at this point. As I mentioned just now, our team still strong, so not to forget the tech names as well. Yeah, monitor closely the highlighted stocks, especially the NE and also minus. Okay, yeah, so we have our Malaysia trading stocks, so we are recommending four stocks today. So we have CloudPoint Technology. So the stock is in its pending breakup formation at 88 cents. So with that, we expect the momentum to remain steady and the stock able to climb higher to test the next resistance at 91 cent, followed by 96 and a half cent. Well, if the stock clear the 81 and a half cent support, this could signal a further pullback, right? Also, next we have Jayatiasa Holdings. So the stock on yesterday has experienced a breakout where it breached the resistance of 418 cent on an accelerated volume recently. So should the bullish momentum to hold and continue to trend higher in the coming session ahead, uh, we expect the next resistance is at 1 ringgit and 25 cent, followed by 1 ringgit and 28 cent level. So do watch out for 1 ringgit and 15 cent support for any attempt of reversal. Right. Thirdly, we have stacks that trigger our screener. Right. So the stock has I mean, in a pending breakout formation below the 3 ringgit and 93 cent. And if this level able to be breached, the next resistance is at 4 ringgit and 15 cent, followed by 4 ringgit and 30 cent level. So support is at 3 ringgit and 70 cent level. And lastly, we have AEON Credit Services. So the stock has breached above the resistance of 5 ringgit and 30 cent. And we expect the price to climb higher towards the resistance of 5 ringgit and 50 cent, followed by 5 ringgit and 70 cent. Now support is at 5 ringgit and 15 cent support, right? So yeah, we are seeing that the financial index gaining traction now. So I think a lot of this can be tied from the investors rotation back into big caps as the market gaining back momentum in the big names, right? So extra info here. Well, if you're keen to look at the banking stocks, maybe you can take a look at CIMB now, right? So firstly, it's very obvious. Yeah, I think that it has been in a consolidation phase recently. So, how do we check if it has completed the pullback right here? Well, of course, as I always use this tool recently, it's the Fibonacci retracement. And we see that the stock have touched the golden ratio of 50 to 61% level right here. Now, using the Fibonacci projection, we can target the potential resistance level. So, uh, the first resistance now is at 7 ringgit and 50 cent, and if this level is cleared, do watch out for 770 as well as 780 ringgit resistance, right? Okay. Also we got Maybank right here. Now the pullback seems to be completed after it retraced towards the 50% Fibonacci retracement. And yeah, it experienced a rebound. Well, right. In this case, the first resistance we are using is we are using the previous level at 10 ringgit and 6 cent. However, beyond this level, we can use by the help of Fibonacci projection level, which is at the 10 ringgit and 24 cent, 10 ringgit 40 cent, followed by 10 ringgit and 86 cents level, right? So yeah, apart from banking, also worth highlighting, right, Mr. DIY. Well, it is now on its bullish momentum, tracking higher, eyeing for uh 1 ringgit and 70 cent level. It has touched the resistance yesterday. And also if you notice here, the downtrending channel has been breached. So there's a high chance for the stocks to propel higher to to clear all the resistance. Well, for now, let's aim for the stock to retest at 1 ringgit and 70 cent, and also 1 ringgit and 75 cents. Right. Lastly, we have FCPO. Well, it slipped on yesterday's close, reflecting a renewed worry that export demand or crude strength might falter. Right. So the recent news had been supportive. Headwinds like weak soy oil price, regulatory concern, as well as the possibility of the oversupply. Right. So in terms of the technical charts, we saw a role reversal, right, of support become resistance at this blue arrow right here. And do note that we are uh, holding our negative trading bias at this juncture, for for 250 support level. In terms of resistance, we are looking at, we are looking at 4,500 with stop loss is at 4,600 level. Okay, so yeah, I'll stop here and pass the floor to Alex for the budget review. Thanks and happy trading, everyone.
Hi, morning all. Thanks for joining us on Morning Cup by 8. Today we've got a short note to just talk about the what we could expect in the forthcoming budget 2026 that will be tabled in Parliament Friday next on the 10th of October. And essentially, as in previous years, given that government finances remain relatively tight, the priorities for the government is three-pronged: to prioritize fiscal resilience, to strengthen economic foundations, and create a conducive environment for inflows of new FDIs into the country, as well as promoting domestic DDI. And of course, not forgetting, support measures to uplift the rakyat in terms of handouts for the lower income groups, as well as new reskilling initiatives. As you may have seen from our economics budget preview report that was published last week, we are looking at a improving fiscal deficit trend. We're looking at 3.5% and 3.2% deficit for 2026 and 2027, down from 3.8% this year, 2025. And with regards to the development expenditure target for 2026, we're looking at 89 billion, given that 2026 will be the first year of the 13th Malaysia Plan. I think going forward, 2025 has been notable for the implementation of the expanded SST, in addition to the recently announced RON95 petrol subsidy rationalization that kicks off today for most of us. And we think that there is a high chance that the government will evolve this RON95 subsidy scheme in later phases to obviously make it more targeted to allow the subsidies to be more greater enjoyed by the low income groups, and therefore the high income groups could be excluded going forward. It remains to be seen, but I think elsewhere, I think the subsidy, the fiscal initiatives, from the expenditure side, will be more focused on ensuring that targeted subsidies reach the group that need it most, and fiscal consolidation, for the most part, will need to be met by expanding the revenue base. But of course, the government needs to tread a fine line to ensure businesses aren't overly burdened by its revenue raising initiatives, given that the expanded SST is really a poor substitute for a proper GST, where businesses are able to offset input tax. Given that GST itself is a politically sensitive kind of initiative, so that's off the table for now. The challenge for the government obviously is to ensure assistance for the low income groups while facilitating a conducive business ecosystem to attract new investments going forward. Okay, I think inside the report you will find some comments by sector, but I think with regards to construction, again, under the 13 MP, we've got 430 billion estimated for total development expenditure over the course of the 5-year 13 MP, to which that is going to target to be to boost infra projects, public transport, flood mitigation, affordable housing, capacity building projects, etc., etc. But I think right now, the data from the CIDB shows that the government projects awarded by the government year to date 2025 is totaling about 33 billion compared to the full year target of 64 billion for 2024. Okay, I think specific projects that are already known are highlighted under 13 MP include some projects like the Sabah Sarawak Link Road, the Pan-Borneo Highway, the Central Spine Road from Bentong to Kuala Krai, Trans-Borneo Highway, widening of plus highways, and LRT3, and obviously also not forgetting Penang LRT. So I think right now we think that the DA allocation for the transport subsector could be higher, given some of the initiatives already in focus to improve public transportation infrastructure across the country. And I think overall, we also would be looking out for further details on the multi-tiered foreign worker levy that not only affects construction, but also other sectors that are relatively dependent on the usage of foreign workers. So overall, we are still overweight on construction. Just a quick word on property. We do not expect more tightening measures to impact the property market. And I think the incentives rolled out in southern part of Peninsula Malaysia, particularly with regards to the JSSEZ, will also is also going to be targeted to spur FDIs that hopefully will encourage greater foreign participation in the Johor property market. Also, not forgetting the government has revised that MM2H policy last year, and hopefully that will be enough to keep the overall property market relatively buoyant. But on the back of that, we know that some of the wish lists of initiatives that property developers are hoping to see from the government, which includes another round of the home ownership campaign. Right now, I think the Radar Association has pointed out that the industry is facing a few challenges, including implementation of expanded SST and rising costs. We think that while sentiment on property market could soften a little bit in the second half, we do note that some geographical subsegments, including southern peninsula, is going to be remain relatively buoyant. So overall, I think we are still overweight on the property sector in the medium term. The other comment I would like to make is touches on the consumer sector. I think we issued a sector note last Friday that already talks about some of the expectations from the budget of 2026. But I think it's worth reiterating that it is possible that budget 2026 could be a little bit more exciting and friendlier for the consumer sector, given the savings for the consumer from various fiscal reform measures, from RON 95 subsidies and rationalization, and obviously hopes that we could see increased allocations for the Sumbangan Tunai Rama and the Sumbangan Asas Rama STR and Asara programs that would benefit consumer staple stocks like Nestle, 99 Speedmart, Mr. DIY, Farm Fresh, and Eco Shop. So overall, while we are overall neutral on the consumer sector, we do note that the consumer sector could see some exciting developments, when the budget is announced. So that we'll have to see. I think so what's worth noting is that in the past, while expectations on the budget have been relatively high, because of the tight government finances, overall the budget announcements have turned out to be have been less impactful for markets, but it remains to be seen, given the possibility of a early general elections being called in 2026 if Sabah state elections go well. So I think even given that GE16 isn't necessarily due until end 2027, but just to keep the government's options open, we cannot fully discount this possibility. Okay, so we'll take a look at the report, and we look forward to the actual announcement and tabling of the budget on the 10th of October. Okay, that's all from me. Let me pass the time to the next speaker. Thank you.
Yep, thanks, Alex. Hi, everyone. So I've got a AEON credit results now to share today. So AEON Credit released its first half FY26 results for the financial year ending February 2026. Essentially, results missed expectations. The first half net profit of 150 million ringgit was down 16% year on year, which made up about 40% of our forecasts and about 41% of consensus. Once again, unfortunately, the key deviation was from credit costs, which came in at 5% versus 3.8% in the previous year, and also ahead of our 3.8% forecast for the year. But I think aside from that, the pre-impairments operating profit growth was quite robust at 18% year on year, largely driven by a 14% rise in total operating income, and also from a lower cost income ratio, largely a result of OPEX discipline. Loan growth was up 15% year on year, mostly driven by personal finance and credit cards, whereas the motorcycle and auto financing segments lagged behind the group average. Associate losses or digital bank losses, these widened slightly in the second quarter, but the first half total of 34 million ringgit is still tracking below management's full year guidance of about 80 to 90 million ringgit. And I think all in, the ROE of 10.5% for the first half is currently trailing the group's 12% target, which was kept unchanged. AEON Credit announced an interim dividend of 13 cents per share, which reflects a 44% payout ratio. And for comparison, the first half 25 payout was 14.25 cents, higher on an absolute basis, but a lower 41% payout ratio. Just quickly on the credit costs or impairments. Impairment write-offs remain still elevated at close to 200 million ringgit in the second quarter. For contrast, management's quarterly run rate target is about 150 million ringgit. So this is more of a medium-term kind of view. And really the weakness came from the younger age and lower income customer segments, specifically from the central and southern regions. But I think encouragingly, collection ratios have demonstrated a sharp improvement in the months of July and August. This was especially so after management had embarked on some targeted collection initiatives. So if these collection improvements can keep up, we think this should be positive for impairments formation and also for credit costs ahead. And perhaps this also informs part of management's decision to leave its ROE guidance unchanged. So for now, we are keeping our forecasts and target price unchanged. But since results were a miss, any revisions to our forecasts following the results briefing later today, any revisions would likely be downwards in nature. But I think regardless, AEON Credit is still consistently delivering ROEs that are north of 10%. So we think its current multi-year low valuation of about 0.8 times price to book looks very, very undemanding at this juncture. So maintain buy for now with a unchanged 7.60 ringgit target price. That's all from me, and I think that's all from my team as well. So thanks everyone for joining us this morning. We hope it was a good session, insightful session, and we'll see you again tomorrow at 8 a.m. Thanks and happy trading.